Hello, this is the Tradesight U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap. Well, not really. For Wednesday, the 22nd of March, 2017. Hope you had a great trading day. We had a huge one here, one of the best of the whole year. We've been waiting for this. I said yesterday I thought the action on Monday indicated we finally would start to get the move on Tuesday, and we did. And boy, was it a big one, and boy, did we have some nice winners. And we'll go through all that here in today's report. And then take a look at the overall sectors and where this means, and then start to take a look at where we're going for maybe the rest of the week. I will be doing tomorrow night's preview, and then I'll be hitting the road, but I'll still be trading during the week, Thursday and part of Friday. Here's a look at the ES front month futures contract. This is the daily chart of the broad market futures form. Big candle down. This is the biggest down candle, well, first of all, since the election, second of all of the year. And well-deserved. So here we go. Let's go through everything else, then we'll come back, look at the intraday action, look at what we did, and then talk about where we're at. So crude oil loses 75 cents to 48.70. Gold up $10.67. It's kind of an inflationary gauge there. Here's a look at the dollar index. We don't always watch this, but it slipped back a bit to start the session out here for the week. Now look at the dollar index sitting right on that static trend line. I think I perfectly used that, by the way. All right, so the S&P loses 29 points. And by the way, this is very important because a lot of what the move in the market has been so far over the last month or two or three has been gap up days. Okay, we've been really bored. There's not a lot of intraday action, and there's no real days of selling, of course, but there haven't really been a lot of days of buying. I can point to maybe 3 or 4. A lot of the rest of it has just been gaps when we get them. This day was a day where we gapped up and just sold off on pretty decent volume. You'll look at the advanced decline ratio, is very negative. So when I say we closed down 30, it's not because we gapped down 20 and closed down 30. It's because we gapped up 5 and closed down 30, and that is real selling in the market. So the first sign of something real for a while. Here's the NDX. This is the NASDAQ 100. Loses 81 points. Again, biggest day down in a while. It had a couple of negative days back in November and December, but this is still bigger than any of that. It's the biggest down day since last September. We'll take a look at the Dow. We don't follow the Dow much, but might as well, right? Look at the Dow down 237. Watch that static trend line back at 20,000. You can get there quick. Remember, markets tend to go down faster than they go up, so let's just keep that in mind. You also don't come off of a day like this and then just everything's fine. SOX loses almost 24 points after a 9-bar startup phase completed the day before to the upside, which is right. Biotechs, remember, this got the 13 sell signal last week. Look at this, down 88 points. The red static trend line down at 2,800 would be the target of this move. The VIX finally starting to climb, which is what we like to see as traders, up $1.13 to 12.47. It's still in the can. I mean, it needs to get off the mat here. But anything that starts to get over 14.15 on the VIX is going to mean good trading conditions for us. So be ready. It's starting to shape up here. Trend closed at 1.64. Another high reading on the trend. 10-day moving average almost at 120. NASDAQ volume almost 2 billion shares. Remember the one volume update on Friday, that's the triple expiration, so that doesn't count. So this is one of the best volume days of the year, probably the third best since, definitely since January 1st. Advanced decline ratio, one of the most negative in a year, negative 1942 on the NASDAQ. That means 1,942 more stocks down than up. On the New York, negative 1753. It's also pretty negative. One of the worst of the year there. Actually, it is the worst since January 1st. Google, remember Google had the 13 sell signal 3 days ago? Boom, down $17.77 on the session. Apple, remember yesterday? Apple got the 13 sell signal, gapped up this morning, boom, down $1.62. Still above the 10-day moving average, but what happens to the market if Apple heads back to at least that 127 static trend line, or fills the gap at 120, or even goes lower than that? Amazon loses 13.77. Remember, this is still operating under a 13 sell signal from back in February. Netflix loses $3.41. Never got a chance to get that 13 sell signal there. Tesla down 11.24. TLT up 99 cents to 120.14. Goldman Sachs, I continue to be short this one. This is a short. My cost base is 244 through options from the beginning of the year. Now closing at 233 even, down $9.14. And look out below if it cracks that 228 or so. There's gaps to fill back to 210 all the way back to 180. Goldman, look at the volume on Goldman. Nothing pretty about this chart. Okay, well, let's look at the intraday futures action, and then we'll take a look at what we did on some of the trades today. So here's the futures. Again, this is real selling. This is how you know this. Instead of just a gap down and go a little lower, or a gap up and go a little higher, which is most of what we've seen this year, this was a gap up. We held for about 15 minutes. Boom. Rolled over, filled the gap, and just kept pushing down. We did get a little bounce heading into lunch. That's not unexpected, as they do a little bit of short covering and go eat. And then drifted lower over lunch, got a 13 buy signal that bounced us very small amount, and then cracked the lows late in the session. So what did we do? We had PRXL, which was a short under 61.67 off the report. It hit it exactly and bounced about an hour in, and then cracked it and went significantly lower. So we had a nice day on the PRXL off the report. That triggered, obviously, with market directional support. We just concentrate on those trades. Goldman Sachs, we called a short here on this one today at $241.50. So separate from the position that we've had. And this thing just went straight down. We walked people through it in the lab. If you didn't at least make 6 or 7 points on the Goldman Sachs, you didn't listen to us, you traded it wrong, because this thing never paused once it started going. Another one was the FSLR. Rich called this short at 29.71. Went down almost a point from there. We'll call it 60, 70 cents for the close. Another one I posted, AVGO short at 220.78. This thing lost almost 5 points from that. And again, straight down, easy money made, nothing else to it. So in terms of trades with market support, we only had one loser today. It was the WFC. Did really well in futures as well. If you listen to our guidance in the room, this is the day we've been waiting for, and you don't usually just get a day like this in a bubble, which means hopefully this is the beginning of volatility. Keep in mind, we just went through triple expiration, so all that option protection that might have been purchased for the first quarter of the year is gone. And that's why this changed character, and that was part of why I was pointing to the fact that Monday's action seemed a little bit more than I was expecting for the first day of a new option cycle, and that it might lead to some movement finally, and we certainly got it. So what does that mean for Wednesday? Wednesday we've got, data-wise, got a few points, but nothing major. MBA mortgage index at 7 a.m., FHFA housing price index at 9 a.m., existing home sales at 10 a.m., the weekly crude oil inventories at 10:30 a.m. Not much data left this week. We'll go through Thursday and Friday's next tomorrow, but it's just minor, 4 or 5 points between Thursday and Friday. But again, I think this is the start of something, and we're going to get a decent move here. And it doesn't have to be 5 days a week. I'd take 2.5, 3 days a week of decent volatility anytime. That's what trading is about. Learn how to make money in those moves. So we are ready to go and teed up. I'm guessing my scans are going to find a lot more stocks on the short side for tomorrow. And then ideally, what do you really want for tomorrow morning? You want to gap up. Remember, when we were heading up in the market, the problem was we were gapping up and pushing up. That's not a bull market. A bull market should gap down and then the buyers come in. We only had a couple, I would say out of the whole last 3 months, we've only had a handful of days of real buying, maybe 10 maximum. And 10 maximum to get you the moves that you've seen. And even on the S&P, I understand it's only about 200 points, okay? But to get the moves you've seen off of just 10 days of buying and then some gaps, it's not very good. It's not healthy for the market. On the downside, we're going to make money. We want it to be healthy selling, which means gap up and actually sell like we saw today. So, I would be disappointed if tomorrow morning we were to gap down significantly. Trust me, if this thing falls apart, there will be some gap down days ahead, but it will be when people are panicking out. So let's not start after 1 day of this. Hopefully we can get the media talking about, oh, it's a buying opportunity and all that junk. We'll get a gap up tomorrow morning. And then if we see them sell it again like they did today, it means the big boys are out in force, ready to take this thing lower. So very exciting times for Tradesight here. Let's get going. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading Wednesday.